When I saw him click the button trade, and I also click, there's a 1 second difference. Latency, not make difference. He probably made say $5,000. I lost $1,000.
That would be different for different types of liquidity providers.
I don't see any difference. I would say how consistent they are.
Sometimes we would see a massive broker onboarding someone as liquidity provider who's just launched, I don't know, 6 months ago and doesn't necessarily have a competitive edge just because someone knew someone somewhere. Welcome to Your Bourse podcast, where industry insights meet strategy to boost your bottom line. I'm your host, Elina Pedersen, the CEO of Your Bourse and also the co-founder of the firm, the fastest trade execution technology on FX and CFD's retail market. And today, I am joined by Wei Zhang from ATFX Connect. Wei is the CEO of ATFX Connect and has a very strong financial background and leadership background. Wei is driving ATFX mission to deliver cutting-edge prime of prime services and institutional solutions. And he will share today how the platform stands out in our industry. Welcome, Wei.
Thank you so much, Elena. Thank you, everyone. My name is Wei. I always say one sentence, I'm the only way in our industry to keep people remember me.
Fantastic.
Very happy to have some talk with some recent event and technology development in our company.
Fabulous. So, Wei, please tell us, how did your career begin?
So I moved to UK 2001 when I was young and university student. So first stop Scotland and then finish all the degrees, moved to London, start my career. The first job was kind of importing, exporting company, although
Okay.
they're from China, although it's a FTSE 200 company, but in London it's kind of like entertainment embassy, right,
Okay.
for the company. And then I moved to private equity industry. Then I was headhunted by broker, which has closed down. I don't want to mention the name. Institutional broker. I worked there for 8 years. That's how I started this brokerage experience. Then 2017, I met our chairman, Joe Lee. Then that's how I started ATFX.
Okay, so, but your background is more financial, right? I think you were the CFO before you became the CEO, right?
Yeah.
So how did that how did you transition from being on the financial side of things and planning, I guess financially, to more of a leadership role, especially in liquidity?
I think I can say something about being an accountant because I'm an accountant. I'm a qualified
Okay.
accountant. So no offensive to all the people who are listening if they are accountant. I don't think I'm good type of material for accountant because I think there's some everybody got some certain qualities for people for things they want to do.
Yeah.
Um, because of my family background, my family run a business in China. I've been in touch with the sales, everything from when I was probably 8 years old or
Okay.
7 years old. After I moved to UK, as you probably know, it's very difficult to find a job for a graduate. So
Mm.
in a very special occasion, I found out actually to study accounting is very easy to find a job. That's why how I started. And then I explored opportunities not only in current company but also in previous company. How do I manage a team? How do I get involved other things like operations, like IT, not only in finance? Then after I moved to ATFX, I found more talent, and I was given opportunity to lead UK team and also develop a business in other regions. Why not try? That's how I.
So it's a mixture of your background, of your family background, and your education then.
Yeah, education and also opportunities. I think um, I feel grateful after joining ATFX. I earned so much trust from Joe, from everybody else. So I really cherish about this opportunity. Yeah.
So that how does your financial background help you then with liquidity?
Numbers,
Numbers?
numbers.
Yeah.
So no matter what, no matter liquidity, no matter what, I
Mm.
mean, bottom line, how do you make money, right?
Fair enough.
Fancy things about how tight the spread is for now and the OP or margin rate. But end of the day, how do we make money? How do we manage the flow? How do we hedge our flow? That's really helpful.
Okay,
Yeah.
fantastic. So tell us, please, a little bit about ATFX Connect and about the vision. I know there's been a lot of changes, and hopefully you can tell us about that as well. But yeah, what's the vision and how was it born?
Yeah, so 2018, I think, um, when the leverage was about to change in UK and Europe,
Mm-hmm.
retail business become a hot topic. How can we continue within this region? So we're thinking about multiple strategies.
Mm-hmm.
So one is, do we want to continue retail or not? So eventually, 2 or 3 years later, we decide to stop. And do we want to hedge our risk by doing something else? That's why from UK office, we helped to develop a region like LATAM because we have the language skill, because the Spanish speaker we have in London. And also we started in-state business because we know in-state business need some time. So you
Mm-hmm.
need to get approved by those big
Of
banks.
course.
You need to earn the reputation. You need to even recruit the people you want to have. So we gradually put something in place. We gradually develop, learn out from our failure, should I
Mm-hmm.
say, and we reached the stage, and we formed a good team now globally.
Well, and speaking of banks, I think that's one of the things that after the S&P event, right, and after the changes in leverage, it became incredibly difficult for smaller brokers to be able to get a PB at the
Mm-hmm.
bank.
Mm-hmm.
But we will talk about that a little bit as we start talking about the liquidity provision today. So, how can you describe the today's liquidity landscape
Mm-hmm.
if you look at the industry and what type of liquidity providers they're available and what brokers have to choose from?
I think there's a two type of liquidity from my view. One I call the maybe a real liquidity, should I
Mm-hmm.
say?
Mm-hmm.
There's a genuine need for this liquidity. There's big players in that as well. I mean, there's famous ECNs. There's so many participants who want to consume the liquidity and
Mm-hmm.
also want to pass a risk they don't like. There's also some liquidity we call recyclers.
Mm-hmm.
They get liquidity from big guys. They press into their platform, and then they attract the clients by some maybe extreme scenario, unrealistic
Mm-hmm.
conditions. Then sometimes they're lucky, sometimes they're not lucky, and that could cause trouble for themselves, for the clients. But people like this kind of a feeling, up and down. They want to use this chance to reward themselves
Mm-hmm.
if possible. So that's two type. But the second type become more and more popular.
Mm-hmm.
But from my 16 years experience, I'm kind of older now. I think there always up and downs. After some time, if there's some extreme scenario happened, one relatively big broke failed, and then the atmosphere will change. People will think, oh, I need to go to other side, not this side. But I think now we're on that kind of a growing pace. The clients we're getting, most of them, I won't say probably 80%, but at least half of them asking for best price, best spread, best NLP, best margin rate, and just make you think, what do they think? How can we make money if we give that kind of a price? I don't know, but there's some competition there. They're offering the same.
Mm-hmm.
We have to take the challenge. Sometimes we have to stick into our rules. Certain business we cannot accommodate.
It is really interesting when certain retail brokers or even traders when they expect unrealistic trading conditions, and then when you tell them, look, but I can't source it
Hmm.
because it just doesn't exist
Yeah.
in the institutional world,
Hmm.
they don't know about it or they don't believe it. So where would you classify ATFX Connect then if we look at, well, the true sources of liquidity? So tier one, then there's tier two, prime of primes.
Hmm.
And of course, well, I'd say tier three would be more of like recyclers over recyclers,
Hmm.
right?
Hmm.
So where would you classify yourself then?
Honestly, I think we probably on the 1.2, 1.3.
Mm-hmm.
So we have two PBs in place. We're trying to use the connections we have using the two PBs, pass on the real liquidity to our clients. But as I said before, um, it's very difficult because
Mm-hmm.
if you just purely pass on this price, this execution, and the client won't like it because they
Mm-hmm.
get something different, even better from other people.
Yeah.
So we're trying to manage the situation. We sometimes get the price and then we do some adjustment send our clients and use our. We have a strong risk team in Hong Kong and also in Europe as well, and manage the flow in a better way.
Sure. So if it's not a secret, who are your PBs? I remember seeing Santander somewhere there, but
Yeah, I mean it's not a secret because it's in the public domain.
Mm.
We recently signed Standard Chartered
Mhm.
because there's some regions they are very flexible.
Mhm.
Some product also they are offering. That's why we signed. Previously we not previously. Currently we still have NatWest. Yeah,
Okay, so
yeah,
NatWest and Standard Chartered.
yeah.
Okay, and when we look at those different models of liquidity providers, right? What would you say, first of all, how do you think brokers can identify who they're working with? And what are the things they should be looking out for when they work with those liquidity providers? So with tier one, tier two, tier 3?
I think that's a very good question.
Okay, thank you.
I think it depends on what do you want.
Mhm.
And also I understand the need, the demand is different
Mhm.
from time to time.
Mhm.
So if I was a broker looking for liquidity, because I'm suffering some slippage, I'm suffering some kind of a high cost from my LP,
Mhm.
now we are looking for a low cost one. We are looking for a stable one.
Yeah.
If I heard there's a big news happening, one of the big LP somehow closed down,
Mhm.
I will look for an LP who has a stronger balance sheet. Right, it happened a few years ago.
Mhm.
It keep happening. So for me, my advice is it's based on your short term and long term gain. And if you are a company who really want to have a long vision developing a business, then you need to looking for a company who has a good history,
Mhm.
who has a strong balance sheet, who is not easily just run away with your money if you made a lot of money, because likely they are doing some risk management for your
Mhm.
flow, and probably you were not aware of, and then based on current market fluctuation, that could happen.
I think that's your accountant speaking, but I think also it's a very important point you're making. It's when a liquidity provider onboards a client, then they do their KYB, they ask for so many things, for so many documents, right? But it's not very common, I'd say, for the smaller brokers to actually do a KYB on the liquidity provider. And I rarely see brokers actually asking for the balance sheet of the liquidity provider. They just go like, "Oh, can you onboard me? Fine, great, let's go." And again, this is something that changed because back in the day, it was a lot more important. Like you couldn't, when you were regulated, you couldn't work with the liquidity provider that is smaller than you, for
Yes,
example.
yes.
And it happens all the time now.
That's another good point. We don't do that.
Mm-hmm.
I mean, at the tier one level, do we do KYB for example, the big banks? We don't do it. And on the tier two level, and some smaller brokers, they don't do. They just, oh, I know somebody from inside. Oh, this company has been doing fantastic on the marketing. We trust them. They got FCA license, but they missed the point. Any company could fail.
Of course.
So I mean, I think some brokers they do have multiple LPs. They don't put all the money in one basket,
Mm-hmm.
but we don't do KYB for upwards. That's a
Mm-hmm.
very good point. Yeah.
Yeah, and the other thing is that with those KYBs, or for example, because we see who the brokers are working with as a part of a technology
Yeah.
that does trade execution and so on. So we know where the trades land, and you are one of our premium LPs, so we know that our clients can trust you. But the thing is, sometimes we would see a massive broker onboarding someone as liquidity provider who's just launched, I don't know, 6 months ago and doesn't necessarily have a competitive edge just because someone knew someone somewhere. And it just shows you what kind of controls are in place,
Correct.
probably in some of those
Yeah.
retail brokers.
Yeah. Exactly.
So in terms of things such as like NLPs or risk limits, is there anything in particular that would be different for different types of liquidity providers?
I don't see any difference. I would say how consistent they are.
Okay.
So especially at some extreme volatility, and like 2 weeks in the last 2 weeks, the
Yeah.
gold, right?
Yeah.
Probably it's a good time for the brokers to review during this period how does your LP behave?
Mm-hmm.
Do they wide the spread? Do they put some condition down? And sometimes they make a change, not a bad thing, because
Mm-hmm.
they're cautious, right? They're cautious of the market. They try to protect you or protect the company themselves.
Mm-hmm.
So try to analyze the situation, say what it is really about. So
Yeah.
are they trying to drive you away, or are they losing some money, or are trying to recoup from you? I think at that point, not consistency is the problem. Is real thing. It's not how cheap it is, how low the price is. It's like when you need somebody to help you. Oh, now market is really volatile. I want actually this order. Could you help me? Is there anybody to help you? Do you have any real, I won't call friend, but real partners
Mm-hmm.
in the LP which really work on your favor? So that's the case thing for me.
Well, the rejection rates, I think,
Exactly.
is also a big part of it, especially in the fast-moving markets. And gold, I mean, yeah, it's been absolutely crazy for the past, not even just weeks or months. I'd say for past year or
hmm
year and a half, 2 years almost.
hmm
How do you manage that flow? Because that's the flow that is very difficult to manage.
It is so difficult, not from our own side, but also when we try to find a proper LP to pass on, they
Yeah.
also put a very strict condition. And this is, we all know like financial market is zero sum game, right? Somebody make money, somebody losing money. So ultimately, somebody will hold all the positions. So we face some challenge. So we constantly looking for, do we have other side,
Mm-hmm.
like people are long and people are short. So luckily, because of the network we have put in place, the regions we have been
Mm-hmm.
into. So currently, ATFX Group have 800 staff, and we have 20, probably 25 or 26 office. I don't know. I
Mm-hmm.
lost the count. We almost have all the regions. We have LATAM, we have Southeast Asia, we have many gold brokers or gold trading
Mm-hmm.
companies. We also have gold refineries. So they have different take, different
Okay.
views for the gold market. Luckily, we have this combination. That's why I think we are benefiting from this
So
move.
due to demand, you're able to manage
Correct,
the flow
correct.
better.
Yeah,
Okay.
exactly. Yeah,
Okay.
yeah.
And what do you do with toxic flow for gold? Because that's again another interesting subject.
It's a definition of toxic.
Yeah.
Um, if somebody want to take the latency or take the opportunity to arbitrage for the
Mm-hmm.
pricing between different market, normally our risk team will say no. They are very active and quick to identify this because it's not hurting ourselves, but also hurting our LP. Nobody like this kind of flow. But we understand, we know people want to make money through all kind of strategies. There's so many flows, so many traders out there, but we're not welcome this kind of flow. So to define toxical, every company have a different definition.
Yeah.
Our definition is only for that bit. For other bit, if people, for example, trade and they are making money through normal trading strategy, we don't consider that toxical. Yeah.
So what would you consider toxic
I think typical one, say
or
the
sharp?
sharp, they always keep one side of position and they
Okay.
ask so many trading conditions to compromise that position and then they hold it. Then it's not good for anybody.
Mm.
So basically, if I want to take that kind of trade, imagine if we or our LP take the other side, it's equivalent to you trade it yourself on the market.
Mm.
So we want a frequent trading on both sides, buy and sell, a general trader, not
Mm-hmm.
like, oh, I probably have one long position with you, probably I have a short position on other side. And then I can make money through this swap free arrangement or whatever
Yeah.
it is.
Yeah.
And then I fully hedged about who is it hurting. We don't
Yeah.
know, right? Could be one side, could be another side.
Well, I think that's one of the things that very often when you're dealing with that type of flow, it's trying to it's for the someone trying to exploit
hmm
something, right? Sorry. So often what we find is it's trying to exploit, in this particular case, the trading conditions they've
hmm
got somewhere which are asymmetric to the practical trading conditions within the financial markets, right?
Yep.
And again, we're going back to not offering the real market conditions where you are able to offset your positions if you have to.
hmm
And it's very interesting how the traders end up always getting hurt by taking something that is unrealistic, like just
Correct.
not having enough knowledge to understand that this is not realistic, you know.
Yes.
Do you have to have a lot of conversations like that with your clients? Do you have to
Yeah, a
explain
lot.
it often?
Sometimes, they cannot be convinced
Oh,
because,
really? Okay.
as said, there's so many competition there, so many people offering that,
Mm-hmm.
where you have to pick up the game you want to play with. So you cannot accommodate all the clients. That's what we have learned in the past 7 years. Yeah.
So you've briefly mentioned it. You're going to Trade Tech next month, was it?
Next week.
Next week,
Yeah,
sorry,
Barcelona. Yeah,
next week.
yeah,
Oh,
Monday.
Barcelona.
Yeah.
And you've just announced a new partnership or investment. I'm not sure. ConnectX. Could you please tell us about that?
Yeah, ConnectX, although it's not a name we have all the agreement internally,
Okay, fair enough.
but I think ConnectX is a milestone for us because we always want to have our own technology.
Yeah.
So we acquired some resources, acquired some basic technology. We have a small team of 8,
Mm-hmm.
spread in Israel and UK,
Mm-hmm.
and we try to develop our own from that base. So it
Okay.
has been going on for 1.5 years. So I think it's a good time to announce it before the event so we can get people to talk about this.
Mm-hmm.
And also we are using this technology for our agency model and also
Okay.
Prime as well. So we're offering Prime. We also had a PR release probably 3 weeks ago. This is also a good offering for our agency side. So
Mm-hmm.
utilize our 2 PBs and offer to the credit and the liquidity to some people probably couldn't be approved by those big banks.
Mm-hmm.
So we can help them to manage the credit, manage the liquidity. Even they have their own LP they can
Mm-hmm.
paper with, and we can
Mm-hmm.
use our status to help them.
Sure. Okay. So what is ConnectX, to be precise?
So ConnectX is aggregator
It's an aggregator.
or
Okay.
is a connector between tier one
Mm-hmm.
liquidity
Banks.
provider.
Okay.
And also some clients could be brokers, could be asset manager, could be investment small investment banks.
Mm-hmm.
They want to trade real liquidity.
Mm-hmm.
So they sometimes may find it difficult to find the right liquidity, and we can help them find it. So ConnectX is the something sit in the middle. Normally, we connect with API solutions.
Mm-hmm.
That's it's not, I don't think it's a technology new to everybody. It's been going on for probably 30, 40 years, but still very popular. Yeah.
So it's a solution for your agency model, as far
Correct.
as I understand,
Yeah.
that is connected to your PB, your banks, and then it helps you manage your positions, whatnot.
Yes.
Okay.
Yeah.
All right. And that's where you currently aggregate for your agency model as
Correct.
well.
Yes.
Okay. All right. And what is the plan with it then? Is it just for your internal use, or are you planning to offer it to end clients as well? Or what's
Currently, we only want to use ourselves,
mm-hmm.
but we want to develop this technology to have a tailor-made solution for our client
Mm-hmm.
in terms of liquidity arrangement.
Fair enough.
Yeah.
Okay. Okay. So based on their requirements, you can go and source it then with all the
Yes. Yeah. Do
connections
some
you have
adjustment.
to.
Yeah. Yeah.
Oh, fabulous. Okay. All right. And you've announced it now. Did your liquidity offering changed with you announcing it or making it available to your clients?
I don't think it changed a lot, but now we are moving away from a third-party software to the
Okay.
current one. So there's many migration to be done, and
Okay.
also to get all the participants to recognize the brand and recognize the technology is a bit of a challenge. So
Okay.
that's why we want to do some marketing, want people to know, we want to talk with people and trying to tell them what we're doing, and then hopefully we can convince more participants into this environment.
I see.
Yeah.
All right. Okay. Yeah, well, I know we integrated. So that's the good news for
Yeah.
our clients.
Yes.
But yeah, I mean, if that can really help you offer better conditions for your clients, then fantastic. Right. What else did I want to talk about? By the way, speaking of ConnectX, I'm just interested, curious. Would that also improve on the latency that your clients could potentially be experiencing, especially?
Yeah, yeah. I think for that kind of a game, agency side, latency is
Mm-hmm.
very, very
Yeah.
important. So everybody want to fast execution. Everybody want to get deal done, get order done. They don't want to have rejections. They don't want to have timeout. So that depends on the team, depends on the infrastructure you have.
Mm-hmm.
So that definitely will. If we don't improve that, we're gonna lose the game because the competition again in that side even more
On the
fierce.
agency side, there
Yeah,
is more
that's
competition.
top-notch tier one technology providers and banks. They're using latest technology. They're using anyone coming, AI included. So if we don't want, if we cannot play that game, then we better probably withdraw. So, but that's something we want to challenge ourselves.
I think also, it's a mixture of, if we look at tier one, again, there is not a lot of tier one providers who are willing to onboard retail FX and CFD
Yeah,
brokers. So perhaps in that front, you'd have more
correct.
advantages than
Right.
those banks. But yeah, if you're looking to work with real proprietary firms, then that's something slightly different.
Yeah, that's if some broker really want to utilize tier one liquidity for what kind of reason, and they find difficulty to paper with a prime broker, because
Hmm.
one thing, you have to have a strong balance sheet.
Yeah.
Second thing, you have to have strong vision to develop it, because the cost, the patience, everything. We providing this prime solution. I'm kind of repeat with the marketing here. So we announced this 1 month ago, and we have some really experienced people from big companies. They moved to here already for 1 year, and they help us to build this.
Hmm.
So now with a strong our balance sheet and with strong connections with two PBs we have, we want to push that, and also with ConnectX technology. So I think we have a really strong starting point. I'm not saying we are best in the market so far, but we're trying to reach that stage.
And that's a thing, that was your campaign, right? About prime of prime, that not all prime of primes are the same or something
Yes,
like that.
exactly, exactly,
You know,
exactly.
I love your marketing team and I love your marketing director, Vince. So yeah, I've noticed that one.
Yeah, we had a long discussion about this campaign.
Yeah,
Actually, there's so many people joined, many debate, argument. We come out, we have to be honest, right?
yeah,
Then we have to really show what actually we're offering,
yes,
and maybe we'll upset some people, but I think in our industry, be honest, integrity is the key thing for the
of course.
long game. And prime, we are. I kind of repeated myself, repeated ourselves. Prime is the solution to genuinely helping people who want to get better liquidity, either from their own resources or from something we have arranged. So they know who they're dealing with. There's no secret. There's no very transparent. They know how the trade has been executed, what is execution speed or quality, everything. It's very transparent. And we, as a middleman, we only charge a small margin, and they also know that as well. So not too many people really understand or enjoy this, but there's certain brokers or certain big companies, bigger companies, really like this kind of idea. So we already started to onboard 2 or 3, and we want to use it next week to explore more.
Well, I think another thing that perhaps brokers don't understand is that offering a real prime of prime also removes the inherent conflict of interest
Yes.
that unfortunately is just there in this industry,
Yeah. It's conflict interest, not only in state world but also in
Hmm.
retail world, right? I think FCA or other regulators keep repeating consumer duty. And how do you really think on behalf of client?
Hmm.
I think as a accountant, still accountant, the real thing is what kind of margin rate you're chasing. If you're chasing 20% of margin rate for a business, you definitely can fulfill this duty. But if you're chasing 200 or even 1,000 margin rate for some cases, not possible. Because by design, if you want to have a double win, triple win, or no conflict interest, you as a middleman broker definition, you define has to make a small percentage of the
Hmm.
trade, not all of them.
So, what was the reason that actually made you step into the light and change
um,
the models? And
I mean, we because the market is so competitive.
yes,
As a relative new player, I'm not claiming we are like a long history. We only have we started 2016, so
well,
almost
it's
10 years.
for our industry that's
Yeah,
considered.
we passed these 4 years,
Yes, exactly,
this
exactly,
this
exactly.
gap. So we're thinking, how can we make it different? Which direction we should go? There's so many paths, so many ways we have been experienced, but for long term game, we have to be stable. And
Of
then
course.
back to the original, back to principle. You want to be stable, you have to really look into the principle being a brokerage, being a broker. You have to help people, right? Otherwise, you become a market maker. But probably market maker could be business making a lot of money, but we are not on that stage yet. Who knows? Probably after 10 years, we all become market maker. But for this stage, we're a broker. So we have to really look ourselves in the mirror and then think, okay, don't brand yourself as something you're not. Brand yourself to who you are really.
Yes, fantastic with the agency model. And, you know, we already see our clients benefiting from it. Let's talk a little bit about our partnership. I
Yeah.
think that would be
Yeah.
great. About the premium liquidity provider. How is that working out for you? I think you've been our premium liquidity
Yeah.
provider for about a year now.
A year now, yeah. It's a very good journey.
Okay.
We make a lot of friends. We had an event in Dubai. I think we also made some influence for your other partner as well, and they also did. You also did
Yeah.
some other event. I think the partnership with your boss, such a successful company, an honest company, and also your service, your reputation is fantastic in all the regions. I think is a good for me. You ask me the question, I'm kind of like salesperson. It's very good. So I'm not a technology person. I couldn't give some comments about how good your technology is. I know it's very good, but your connections, your service, your reputation in our industry is fantastic. So
Don't you just love it when two salespeople are sitting next to each other? It's just like, you're great, you're
yeah,
great. Yeah, this
exactly.
is great.
But this is true. It is true, right? It is true.
That's
It
true.
is true. So not only for this talk, but also in general, I totally respect your boss, the work they have been doing in the last few years, and you're trying to be one of the best in our industry. You really made a good impact. So
I honestly think that, well, I know that a few dozen clients that you are servicing through us are very happy. And I know that they always have an open conversation with you. And I think that's the best way to go. Like, this is the best way to do it with the liquidity provider when you
mm,
can have an honest conversation and say, this is what I need. Can you help me with this? And some of them are actually, well, they onboarded when they were startups, and they've been growing. So I'm just wondering, maybe you can give a bit of an advice, because I know they always come to you for an advice of, like, what are the major operational pitfalls that brokers often overlook when founders overlook when they start a broker. Like, what do you think are the biggest mistakes they're making?
I think the basics. I'm because we started so many new business, new adventure
Yeah.
in certain regions, especially on the retail side. When we start any new business in new regions, for example, LATAM, for example, Africa recently.
Yeah, I remember South Africa. That
Yeah.
was
So the actual demand from client is very basic. They want a
Okay.
reliable platform.
Okay.
They want to know their money is safe.
Okay.
They want a fast withdrawal,
Mm-hmm.
and they want a fast deposit.
Mm-hmm.
Because when they saw the opportunity, they want to trade the deposit. They want to trade now. But I'm not competing. I'm not comparing ourselves with top guys in our industry. They have far more money than we have. They have a big team. Make this technology very very instant, right? For majority of new brokers or the brokers who want to develop themselves, some basic things to make the execution, quicker. I'm not only talk about trade, but also operation wise, like how can you make your customer service team to be one of the best?
Of course.
That's involve how do you react client requirement. It doesn't matter you're using app or you're using fantastic colorful client portal or you're using emails. In our in-state world, most likely we're using emails.
Yeah.
It's a basic communication tool. And then how can we react the requirement from client? That's the requirement we put in place in all the regions. I mean, some regions they're just picking up, they need to more training. But to overlook this one, that could cause failure because for in-state side, you probably only have one hit, one chance to deal with the client. The sales people, the manager spend so much time to convince the clients to onboard us, and then when they deposit the money, and take 2 days. And why? Because maybe your customer service team is busy, they forgot to check the bank account, or maybe some other reasons, or they missed out. For these ones, need good leadership in that division and good people really, really pay attention to details, and that could make happen. I think that's the key thing missed.
Very good advice. Also, I'm just wondering because that's something that I often see. I often see that brokers, when they launch, especially startups, they often, I don't want to say overlook the dealing desk function,
Mm.
but they're maybe not as proficient on that dealing desk side. What would be your strategy if you would be launching a broker? Like, would you focus on it? Would you do a rev share? Actually, I would
Mm.
love to hear your opinion on a rev share
Yeah.
deals. Would you do a rev share and not touch the dealing desk at all? Like, what would you do?
I think if I start a new broker, I only have limited resources in terms of
Hmm.
capital
Yeah, of course.
and people as well.
Hmm.
I would go for a relatively bigger LP, reliable, have a
Hmm.
strong balance sheet, helping the manager
Hmm.
risk. As we mentioned earlier, as a broker, what is a broker, right? What margin really you're chasing? At the beginning, every entrepreneur want to develop their own business in long term.
Yeah.
Nobody want to say, as especially in financial industry, oh, got to kind of run a business for 1 month or 2 months, right?
Hmm.
And to eliminate the big risk, which is dealing,
Yeah.
which is very, very, smart decision from my view. And then you just focus on marketing, focus on sales, focus on maintaining your relationship with the
Hmm.
clients. And then when you choose your broker and you look at the point we mentioned about balance sheet long term, choose the one who help you to manage the liquidity properly. Revenue shares very popular. Back to the point. This could be very attractive for somebody of 50% or even
Oh,
more.
really? Okay.
But my opinion is almost every single revenue share deal end up with PT because when you both parties, clients and an LP, making money from underneath client because they're doing big book and they do big book share,
Hmm.
everybody's happy. The only people not happy is a client who lose money, right?
Hmm.
And that's a game, that's trading. So everybody losing money, making money. But when the client make money, they are happy. And then what will be next step? The clients will say, okay, if there's a downside deal, whatever it is, I owe you 1 million. What is my next move? Go to another LP. So normally LP will not sue the client no matter what kind of deal they have. If they don't have a mechanism to hold the cash into the LP, they leave, they leave. We rarely hear some big cases. Now, many cases about
Yep.
B-book share argument. I think I'm not saying we're not offering to offer that cleverly, smartly, and with a low percentage, and it's beneficial for both sides.
Mm.
That's my view. And also, how do you pass the flow? Do you pass everything to the LP,
Exactly.
or underneath the client? What kind of profile those clients are? You have one client, or you have 1,000 clients. So all consider different the factors you want to consider. The risk team of the LP, when they offer this, they should ask many questions like this from the client, and client shouldn't feel offended by this. They should think, okay, they are thinking also on our benefit. We want to make more money through a better way. They also want to. So keep it transparent, keep a very good communication channel. That's the key thing.
It's again, we're coming back to having this transparent relationship with your liquidity provider
Yeah,
because otherwise how can a liquidity provider serve as a broker if they don't understand the
exactly.
flow of the broker's business? It's just not possible. But an interesting part you've mentioned is that when we look at those rev share deals, the biggest, I don't want to say scandals, but arguments that I've seen would always be in the lines of when the brokers look at the flow in retrospect. So they go, oh, you've decided to offset this, or you decided to, well, A book, whatever, pass it over. And actually, it was B bookable flow. So I want a rev share on that. But the liquidity provider actually decided to take a safer approach, for example,
Mm-hmm.
and, offset it. And that's where you see a lot of arguments because it's always easier to look back at the
Correct.
situation
Yeah.
once it's done and be like, oh, you see, well, perfectly, it's a perfectly internalizable flow. It's like, yeah, you can say it now, but
Yes.
you
Yes.
perhaps couldn't have said it,
Yeah, we have a
a
saying in
week
our
ago.
culture: "You feel smarter afterwards."
Yeah, yeah, yeah. Is it an actual saying?
It's a kind of a translation I made up.
Okay, okay. Right. You know what? An interesting question that I had prepared for you was more about latency. I think we briefly touched it, But I'm just curious, why is it important in an agency model? And like, how can it possibly affect the broker's bottom line? Like, why do brokers need to really care about it? Why do they need to measure it? Why do they need to understand where the trade sits?
Latency. That's the nature of our business, right?
Mm-hmm.
There's so many companies with a name showing as speed, right? So that shows that's very important because the financial market is about a game who play first, right? Who see the trend first.
Mm-hmm.
And now we talk about a millisecond, microsecond, this kind of a game,
Yeah, very simple.
and that's require a lot of infrastructure to put in place, because again, it's kind of which game you're playing. If you want to race in your school, have a run. That's very easy.
Yeah.
You will probably win several reward because of that. But then you go to Olympics, you wouldn't pass the first test. So I mean, I'm not saying you. I'm
No,
saying that,
I
yeah,
understand. Don't
yeah,
worry. We pass. We're sub micro.
yeah,
We're fine.
yeah. But it's the game you want to play, because you are competing with the people who has a better speed, and then if you are partnership with a technology provider or some LP who either deliberately
Hmm.
or unconsciously to slow you down, and end of the day you miss the move.
Hmm.
And then when I was trading, I mean,
You were trading.
stupid of me, I thought I can trade. I saw, okay, if I knew one trader who is good, okay, I can make him sitting beside me. When he trade, I trade. When he buy, I buy. I can make money.
Money. You needed a money manager.
Yeah, exactly. And then now realized
Pam.
when I saw him click the button trade, and now also click, there's a 1 second difference. Latency not make difference. He probably made a say $5,000. I lost $1,000 because of the move. I expected that. I thought I'm clever. Okay, I have a good guidance, and then he trade, I trade, and I lose money. He made money, and
Very
that's
good.
probably a good analogy for the latency, because in our financial market, time is the money, right? It's, if that could be an excuse for you to not to define your strategy, but if your strategy is right, and then latency could be a block for your strategy.
Hmm. Yeah, I mean, for brokers, that's again another issue, right? If there is any part of the puzzle that is delaying the trades to get where they need to land, again, that can be a massive issue in terms of risk management. So yeah, I completely agree. Thank you. I do want to ask you a few questions that I always ask at the end, and they're a bit more futuristic, let's say. But the first one that I want to ask from that few questions would be, how do you think the flow is going to evolve over the next, it's hard to say a few years because
Yeah.
we don't look into that kind of time horizon anymore. It's like, let's look at, I don't know, 6 months. How do you think is it gonna change? Will the asset classes change? What do you see? What do you envision?
Again, as a unprofessional advisor, only
Unprofessional. Disclaimer,
yeah,
this
yeah,
is not a
disclaimer.
financial
Yeah,
advice.
I just saw from my personal view,
Mm,
from what I've seen from our company, and then from the limited resources I have seen, I think the gold movement will still continue.
okay.
I think people are chasing for the movement. People chasing the opportunity to make money. There isn't too much move in other currency pairs. I think the sterling's coming back,
Mm,
euro's coming back a little bit, but gold is still the spotlight for this. Based on the level it is, that so many people think it's going down. Many people still have the view going up. I don't know, because I had a view of 3,000, probably that's the line. But now, you look at the price now. But because of this doubt, because of this uncertainty, I think there's still movement there. There many things happened in the world,
mm-hmm.
many uncertainties. I was surprised we have this test last weekend about this mobile phone alert.
Oh,
Oh
yeah.
yeah, I was like, oh, what is
You
coming?
didn't
Yeah,
know about it.
yeah, I know that, but I only saw that in a movie, right? It's like, what's point to do this? Is it something we don't know, they know, or something like we're preparing?
Oh,
I hope not, but it shows like something um, in our mind or in this world we experience. We never thought COVID can lock us down for 3 years or 2 years, right? and it happened. I don't know
Regarding the alert, and the editors can cut it out if they want to, but I have an interesting experience. I had an interesting experience. So, I think it was, how old is my daughter now? She's 8, right? Probably when she was like 2, maybe between 2 and 3, something like that. We went to the US for a trip, and it was a road trip. So we went to Oregon, of all places, and we were driving somewhere in the mountains. Can't quite remember. So we stayed over, we stayed overnight at some random small village hotel thing. And in the morning, we're sitting down having breakfast, and we're having our 2-year-old next to us. And all of a sudden, everybody's phone in the hotel just goes off. Similar sound alert alarm as it was last week, right? But me and Andre are the only ones who jumped, like literally jumped, be like, what is this? And people look around and go like, oh, it's an Amber Alert. And I was like, it's an Amber Alert. Like, I don't know. We're from Europe. We don't know what an Amber Alert is. And apparently an Amber Alert in America is when a child is being stolen somewhere.
Yeah.
And then they send an Amber Alert. And in that alert literally was like, watch out for Subaru something numbers.
Yeah.
Child's been abducted. And apparently it happens a lot. And then I went on Google, not ChatGPT back then, Google, and I checked. And like the cases of abduction like that in America is so common. But in Europe, I think we only had like 30 in the past 15 years or 20 years. So for us, and we use Amber Alert as well. So I've never knew that. Like there is an Amber Alert in the UK, in European Union, and it can happen. We just never came across it.
Yeah. I mean, I think you're right. In other countries, for example, in China, if there's an earthquake, because people have to alert because earthquake could pass in from one location to another one, take some time. It's very very convenient for people to take some action. But for me, I'm thinking one of the very wise person told me. I kind of agree with him. In the past decade or past 100 or 200 years, many things important happened, or many disaster happened, human disaster happened because of one mistake made by some leaders. Maybe because of their ego, maybe because of wrong instruction, or maybe because of misunderstanding for certain people, and it caused some big consequence. So in his word, he said he's worried about in all the hot places we have, no matter it's Far East or Middle East or some other places, if somebody made a stupid decision, which could be anybody, and it caused a big consequence for all of us. I don't know, because nowhere in a world, probably half of us also have some, things in our head need to be fixed. People just thinking too much. So many social media things, so many things, really influence us. I was talking with other people, whether technology bring us comfort or bring us convenient or bring us peace. I said, can you imagine 30 years ago, people will put what do they wear, what do they drive, what do they eat on newspaper, try to tell other people I'm better than you. You cannot imagine that. So if you see that on newspaper on that time, what do you think? Either you think the editor of the newspaper is crazy, or something's going wrong, right? Or it's a 1st of April thing. Right?
Yeah.
But now it's all everywhere. But did we change? Can tolerate this kind of behavior? We didn't.
No.
This influences us. This affects us day-to-day life. Oh, friend of mine just bought a new car. Oh, I didn't. How did I do it? And why I'm not achieving that level for status? And it costs you next action now. That tonight I was going to have a dinner with my wife. I want to cancel that because I want to probably put my head into my computer, think about my next move. Right? Everything is changing. So back to the point is this crazy things happening around the world, no matter from certain countries or no matter from our community, to affect our flow, uncertainty.
Fair enough.
Yeah.
Okay. Then I'll ask you one last question, I promise. And the last question would be like, what are the trends? Please don't tell me AI. Please don't tell AI. What are the trends that you're currently observing and you're really hopeful for? Or like, what do you think is going to change in our industry in the coming year? 6 months? I don't know. How far can your glass ball see?
If I know, I wouldn't tell anybody.
Okay.
So I mean, I can tell from our own experience, we're also only looking for next growing point. So LATAM was a good decision back to 2019. We
Mm-hmm.
started at very
Mm-hmm.
beginning, and I will blame probably our marketing team. We keep telling LATAM is good, and then now it becomes so crowded. Difficult
Because
to,
you're promoting it.
yeah, it's difficult to make money now. Now we started a new journey in Africa.
In South Africa or just
To
across
whole
the
Africa. So
continent?
we start
Okay.
from South Africa. We also understand that continent is not a new continent. It's so many
Mm-hmm.
people tried, but we
Mm-hmm.
see many people failed as well.
Yes.
We learned the lesson, and we entered the partnership with Fortress Core,
Mm-hmm.
and they are really well connected in locally.
Mm-hmm.
We found. There's a demand for white label solutions, a demand for technology. I think you have similar experience, and so many brokers to be, or some kind of brokers, young brokers need some help. They, although some experience we have or some knowledge we have, we think, oh, it's common. Yeah, I need this table for my living room. But in some places, probably they don't. Oh, why we need a table in the living room, right? I can hold it in my hand. So many things like that we can help. That means opportunity.
You're great at hand holding. I know that.
So that make us think, okay, really target some people we can help.
Mm-hmm.
We cannot target in some bigger players already in the industry. Probably in Africa, there's only one branch for them, right?
Mm.
We want to target some local brokers, local people. They haven't been to exploit the world yet. We
Mm-hmm.
help them to for this with
So
our experience.
emerging markets.
Exactly. Yeah,
Okay.
there's a philosophy, or I'm not inventing myself. People make money through the age gap. So the older people make money from young people, right? The people make money from more experienced against less experienced. So because we have experience, so why not using our experience to help people who need it?
Oh, you know, I love your wisdoms. I think I'm gonna release a book
Thank you.
one day. It's like Wei's wisdoms.
Maybe another tick box.
Okay. Thank you very much.
Thank you.
It's been incredibly insightful as always, and thank you very much for coming to our
Thank you for the
podcast.
chance. Yes.